Monster Beverage was the dominant energy drink producer, but is this stock a buy right now? Welcome to the Food Fund. Can Monster Beverage stave off Celsius and win the energy drink category? If you want the answer, you need to watch this video. Let's start with the price action. Over the last year, you're looking at a massive 32% CAGR. Zoom out to 5 years, and it's a healthy 11% CAGR. Though growth has slowed recently, the legacy of massive gains makes shareholders hopeful. Market share is a key factor for food and restaurant companies. The dashboard shows Monster Beverage is both the fourth largest and the fourth smallest non-alcoholic beverage company. It is nearly 10 times bigger than Celsius. Looking closer, they have a 0.93% share of the market among public food, beverage, and restaurant stocks. Over the last 5 years, Monster Beverage's market share has compounded at a respectable 6% rate. They've gone from 0.76% in 2021 to 0.93% today. That trend is steady and upwards. I like it. Now let's look at the fundamentals. Gross margin is 55%. Energy drinks have great gross margins. Revenue has grown at a 10% CAGR over the past 5 years, now at $7.66 billion. Though growth has slowed, the company still brings in massive amounts of revenue. The cash flow also looks good. Operating cash flow increased at an 18% CAGR. CapEx worsened at a 54% CAGR. The result? Free cash flow has grown at a 16% CAGR. This company is printing massive amounts of cash every year. Let's see what they do with all of that cash. Weighted average shares outstanding have decreased tremendously over time, going from 1.1 billion shares in 2021 to 982 million shares most recently. Monster Beverage has done a great job of buying back shares. This is the real secret behind their massive share price appreciation. Next, return on invested capital. This tells us how efficiently management has used capital from investors. Going from 37.7% in 2021 to 28.4% most recently, management has gotten less efficient at driving earnings from investments. Still, the current return on invested capital value is good, but is degrading over time. For operational efficiency, measured by the cash conversion cycle, Monster Beverage is actually doing poorly. It went from 68 days in 2021 to 89 days most recently. Surprisingly, many energy drink companies do poorly with this metric. Finally, debt. Net debt to EBITDA has risen from minus 1.7 in 2021 to minus 1 most recently. Monster Beverage is profitable, so this means that the company has more cash than debt. This is great. Now let's compare Monster Beverage's performance against the gold standard, the S&P 500. Investing $10,000 in Monster Beverage would have grown the investment to $27,112 compared to $38,363 in the S&P 500. That's an annualized return of 10.8% for Monster Beverage versus 14.8% for the S&P 500. Monster Beverage also showed higher volatility. Risk-adjusted returns, as measured by the Sharpe and Sortino ratios, were worse for Monster Beverage. Investors were better off owning the S&P 500 instead of Monster Beverage. A sobering but important fact. Monster Beverage traces its origins back to 1935, when Hubert Hansen and his 3 sons began selling fresh fruit juices in Southern California. The company formally launched its flagship Monster energy drink in 2002, which quickly became a sensation and led to the company rebranding as Monster Beverage in 2012 to reflect its core business. Today, Monster is a global leader in the energy drink market, with its portfolio including the original Monster Energy line, low-calorie ultra varieties, juice-based energy drinks, and other brands like NOS and Full Throttle. The company has nearly 7,000 employees, with its worldwide headquarters located in California. Despite its steady growth and strong balance sheet, Monster Beverage is not perfect. Based on my proprietary scoring system, I give Monster Beverage a 5 out of 10. Still, I expect Monster Beverage to produce good returns for many years to come. Before I share my final thoughts on that, if this analysis was helpful, please hit that like button to let YouTube know. It really helps the channel. And if you want more deep dives into food, beverage, and restaurant stocks, subscribe and ring the notification bell so you don't miss the next video. Your support means the world to the Food Fund. Also, don't forget to turn on your notifications if you are watching on a mobile device. So my final thoughts on Monster Beverage. Let's write it out in the spreadsheet. It is a beverage company with a gross margin of 55%. The 5-year revenue per share CAGR is 12%, and the 5-year free cash flow per share CAGR is 19%. These are great numbers. A return on invested capital of 28% is good but worsening over time. Next, the cash conversion cycle of 89 days is very high but has been improving over the last couple of years. A net debt to EBITDA of -1 means that Monster Beverage has more cash than debt. Now let's switch our attention over to valuation. The price to earnings growth, or PEG ratio, is 3.4, indicating that Monster Beverage is overvalued relative to its expected earnings. Monster Beverage is a consistently growing company with a strong portfolio of popular products. Despite the headwinds many other food and beverage companies are facing, Monster Beverage, along with other energy drink companies, are doing well. RBC Capital Markets co-head had this to say about Monster Beverage on Bloomberg recently.
Look, Monster is levered to a really good category in energy drinks. And what's really interesting here, and kind of out of consensus or contrarian view is it's actually trade down that's partly helping the energy drink category, because the price of coffee and the price of carbonated soft drinks, other, caffeinated beverages, have gone up materially more than energy drinks. And so consumers are actually down trading, if you think about it, in terms of getting their caffeine fix. So we continue to like Monster. We think they have a big global opportunity, in addition to seeing good growth here in the US as well.
There are plenty of tailwinds helping the energy drink sector, and Monster Beverage is positioned to benefit for at least the next couple of years. Still, Celsius is growing faster and more efficiently than Monster Beverage. Why own the second best company in the sector? What do you think about Monster Beverage? Are you an investor? Share your thoughts in the comments below. I always love hearing from you. Check out some more videos right now, and remember to put your money where your mouth is.